Welcome back to the Michigan Business Beat, brought to you on the Michigan Business Network. Chris Holman. We're coming to you from the studios at the Capital Region International Airport, but we're going to stay in town. As a matter of fact, we're going to run across town to East Lansing and spend a little time with Eric Rosekrans, who is the Executive Vice President, and Tom Jamieson, the Senior Vice President, Office Advisor at Martin Commercial Properties. Good to have you guys aboard. How you doing?
Good. Great to be here.
Good, Chris. Thank you.
You guys look too relaxed to know what's going on in your industry. I
don't I'm not sure we do, but we're going to give it a shot here.
You know what they say? You know what they say? Fake it till you make it, right?
There you go. I like that. I live by that, as a matter of fact. Hey, the office market held relatively steady in the H1 2025. What factors are contributing to that? Because nothing else seems to be stabilized around us.
Well, I think stabilized is something you have to put some thought into. There was so much volatility since COVID that stabilization over the last couple of years has occurred in our market, but the volatility from 2020 to 2023 that created issues with the office market have stabilized. Even though all indices are up, the vacancies up in most sectors. Absorption is neutral, which tells you that there's no new space coming online, either from vacancy or new space being built, but there's no reduction of space from people leaving. So it has moderated and it has stabilized, although it is at higher levels.
You know, we've kind of seen landlords offering a lot of greater flexibility. How is that influencing and tenant retention and lease negotiations, et cetera?
Yeah, I mean, it all depends on the financial wherewithal of the landlord. If they have the ability to improve the space and improve the land around the buildings, tenants will stay, and they've got to have that flexibility. Occupancy is king, as we've always mentioned. So whatever the landlords can do to keep the tenants, they've got to do it. It's the B and C type properties that are losing the tenants because they're not able to keep the spaces to the levels of what the tenants are expecting. So those are the properties that are probably hurting the most right now and having the most vacancies.
You know, it's kind of interesting.
Still doing well.
It's kind of interesting because through this turmoil, and I'm suspecting a lot of it was a hangover from COVID-19, the people who got the most busy in your industry were those that were renovating offices and changing workspaces, et cetera. And I would imagine that plays right into what you said.
Well, it absolutely does, and it'll probably always be a part of the office market. That sort of thing, as people work with hybrid work and how that comes together and how executives and owners of these companies feel about that concept. But it certainly has clearly made an impact, and it probably will continue to impact the office market over the next few years, but not to the degree that it has, because so many companies have already adjusted to whatever work environment that they have decided to implement.
So let's talk a little bit about what investors should be thinking about in terms of value, responsibility, or repositioning, and really long-term risk.
Well, the office sector is very different than the retail or industrial from an investment standpoint. The office market is not nearly as strong from an investment standpoint. Actually, there's really no speculative buying in the office market. What is selling from an investment side is properties that are almost fully leased to high-rated tenants, paying good rent for that have long-term leases. There's just not, from a speculative standpoint, most investors aren't going to take the risk unless that risk is mitigated by extremely low sales prices. So it's been a challenging market from that perspective. The owner-user market has been different. There have been significant sales, especially in this area, for owner-users that have decided to purchase buildings for their use, or either entirely or mostly. And that's stemming from the fact that prices are are more depressed than they have been, certainly pre-COVID. But the other thing I think from an investment standpoint is what the financial institutions look at for these investments. And many banks won't even look at an office product for financing. They will look more towards the individual or company that's buying it and the wherewithal they have. But that's another issue that you face, is the financial institutions look at these kinds of projects.
Well, the banks haven't changed a lot. It's that cash flow piece that they look at, as you know.
That's right. Yeah, that's right.
We've got about 30 seconds left, literally. Are there any national trends that we should be keeping our eye on?
Well, I think most of it is, we kind of talked about a little bit about it already, the remote and hybrid, what the companies have already relied on or what they've already adjusted to has been done nationally. Flight to qualities, as Eric likes to say, is that, tenants are going to better quality space. They may be downsizing, but they're improving their spaces. And then, you've got the downtown struggles of what we have in Lansing is similar to everywhere else. They're all going to the suburbs.
Yeah. All right. Eric Rosekrans, Executive Vice President, Tom Jamieson, Senior Vice President, Office Advisor at Martin Commercial Properties. Thanks for that update, you guys. We appreciate your time.
Okay, thanks, Chris.
All right, take care.
You're watching the Michigan Business Beat on the Michigan Business Network. I'm Chris Holman. We'll be back with more.